Something pretty big is happening in Japan's real estate market right now. We're talking about a fundamental realignment, a deep shift that's creating a whole new set of winners and losers. And it all boils down to one simple but really important question.
Have you noticed this? If you've been keeping an eye on the market, especially in the big cities, it might seem like new condominiums are just vanishing. All of a sudden, they're much harder to find. So what on earth is going on?
Well, the answer really comes down to two things. You can think of it like the entire market is caught in a vice grip, with two massive forces squeezing it from opposite directions. And if you understand these two pressures, you understand the whole story.
So let's break them down. These are the two big squeezes, the real engine behind this whole shift that we're seeing play out across the country. Here they are. On one hand, you've got the cost to build anything just going through the roof. Materials, labor, you name it. It's just getting incredibly expensive. And on the other hand, you have the buyers, and they're basically hitting a wall. There's a limit to how much more they can afford to pay. So you've got costs pushing up and affordability pushing down. It's the classic squeeze.
So what happens when you get this kind of intense pressure? Well, you start to see major changes, and the first big consequence is a huge pivot happening in the residential housing market.
Wow, okay. These numbers really tell the story, don't they? I mean, look at this. New condo construction compared to the year before, down over 17% in the greater Tokyo area. That's a big deal. But the Kinki area? Down a staggering 56.5%? That's not a slowdown. That's a market hitting the brakes hard. So you have to ask, why the big pivot? Well, think about it from a developer's perspective. Big condominium projects take a long time to build and sell. And with costs soaring, their profits are getting squeezed super tight. So they're switching to detached houses. Why? Because they can build them faster, sell them faster, and get their cash back much more quickly. In a market this uncertain, it's kind of a no-brainer.
And it's not just a condo story. Check this out. 4. For 4 straight months, the total number of new homes being built, that's all types, has gone down. This tells you it's a much broader cooling trend across the entire housing market.
Okay, so that's the housing market. But this trend isn't happening in a vacuum. Let's look at commercial real estate, because it turns out the same dynamic is playing out there, a real split between what's hot and what's not.
Now this is really fascinating. You've got this clear split. On one side, construction for offices and factories is actually going up, with people heading back to the office and Japan making this big push to bring key manufacturing, like semiconductors, back home. But on the other side, warehouses and stores are dropping off. There's a sense we might have overbuilt on logistics facilities, and with online shopping continuing to dominate, well, you just don't need as many physical stores anymore.
So we've seen this split between different property types. But there's another divide, and it might be even more important. It's geography. We're really looking at a tale of two markets, the major cities versus everywhere else. You see, in the big cities, developers are adapting to high costs by changing what they build. But in regional areas, the problem is much more fundamental. The demand itself is just drying up. Let's zoom in on Toyama Prefecture to really see what this looks like on the ground. Just look at the data for new housing starts in Toyama. You don't need to be a market analyst to spot this trend. October, November, December. Month after month, the number just keeps dropping. We are literally watching this market shrink in real time.
And here it is, the punchline, a 40% drop. In February 2026, new housing starts in Toyama didn't just dip, they absolutely plummeted by nearly 40% compared to the same month the year before. That's not a cooling, that's a market in full retreat.
So why is it so much worse outside the big cities? This quote right here gets to the heart of it. Rising construction costs are a problem everywhere, right? But in a place like Tokyo, developers can pass those higher costs on to buyers because property values are so high. In a regional area, you just can't do that. The local economy won't support it. So if you can't raise your prices to cover your costs, what do? You just stop building. It's that simple.
So let's step back and put all these pieces together. You've got the cost squeeze, the pivot from condos to houses, the split in commercial properties, and this massive gap between urban and regional areas. What you get is a completely new map of Japan's real estate landscape.
So what does this new map look like? There are a few key features. First, the big money is all chasing a very small number of super profitable properties right in the city centers. Second, it's not just about square footage anymore, it's about what makes a property special, the added value. Third, since less is being built outside the major hubs, fixing up and renovating existing buildings is going to become way more important. And the result of all this? A growing divide, a real polarization between a handful of rare, high-value properties and pretty much everything else.
And that really leaves us with the big question for the future. In this new, more selective, more divided market, where are the real opportunities? Where and how is true, lasting value going to be created? That's the puzzle everyone in the market is trying to solve right now.
Hey, if this breakdown helped you make sense of the huge shifts happening in Japan's property market, do us a quick favor and hit that like button. And of course, make sure you subscribe for more deep dives like this one. Thanks for tuning in, and we'll catch you on the next one.